Welcome back, everybody. Welcome back. How's everybody doing? Appreciate you joining. Make sure you hit that like button, subscribe to the channel. Click the link in the description for the Patreon if you want to join the Patreon and join the Discord community. Let me get a quick brief roll call right quick. Let me see who's all in the building. Make sure you subscribe to my X. I got it pulled up right here on the screen. Subscribe to the X if you're brand new to the channel. Subscribe to the channel. Press 1 if you can hear me. Press 1 if you can hear me. Audio test. Testing, testing, testing. Do we have anybody in the live stream? I'm just testing the audio. Can everybody hear me before I move forward? Got 5 people watching. Anybody can hear me? Can everybody hear me before I move forward? Just type 1 in the chat if you can hear me. Testing, testing, testing. I just need one person to respond. I don't need a whole group. Just somebody respond. Can you hear me in the chat? Press 1 if you can hear me. What's up, Dorelli? I appreciate it, man. Appreciate it. All right, let's get started, man. All right, I need some engagement, but tonight we're going to discuss what type of trader are you? You know, what type of trader are you? There's many different styles of trading. There are long-term investing. I call that position trading. Something called swing trading. There's something called short-term trading. There's something called day trading. There's something called scalping. And then there's the universe of high-frequency trading. So I'm just trying to get an idea of, you know, what style is my community? What are you? That's the question. That's one of the most difficult questions. Like when you start doing this skill right here, you're gonna run across some roadblocks in discovery. But it's good to capture it early to realize or discover who you are as a trader. Me, I'm a universal trader. I can trade all styles. What's up, AWB? What's up, Shep? Everybody in the building. I'm a universal style trader. I can trade all styles, right? So I prefer not to do long term. I'm growing out of long term trading, meaning trading for years and months at a time. That's long term investing. That's traditional investing, right? Once I started developing this skill set, I'm starting to kind of grow out of that. You know, that's the beauty about learning this skill set. You're going to start discovering different styles of investing, which that's what we're going to talk about. So everybody in the chat, right? Everybody in the chat, people that's just joining, how much experience do you have, right? How much experience do you have with investing? And then how much experience do you have in trading? Let me get some engagement in the chat. What's your experience level right now? Most people I know are long-term investing, but I'm just trying to figure out what kind of experience do you have? What kind of experience do you have as a investor? Kind of experience do you have? Anybody? AWB. Let's see. Padawan trader and long-term investing. Okay, okay. I don't know what Padawan means, but I kind of sense what you're trying to hint at. All right, I'm not gonna be long tonight. Let's get into it. Let's come to the charts, right? Let's come to the charts. Let's come to the charts. So where I left off in my first episode, the AWB Padawan equals early stage learner. Okay, okay. Early stage learner. Anybody else, right? Anybody else in the chat? Anybody else in the chat? What? How much experience do you have with this? How much experience do you have with investing or trading? I'm just trying to get a sense of idea of what the community, where you're at currently. This is a highly sought after skill, right? This is very highly sought after. Takes years of development, self-development. And once you obtain it, there is no limits, no limits. So trying to engage how much time people have doing this. Maybe, but anyway, people will be able to watch this on the replay. So let's start with like where I left off in my last lesson on my last course, episode 1. We went over a top-down analysis, right? Went over a top-down analysis. I gave you applicable tools that you can use to come straight to the market and apply it directly to the market. After you do that, right? After you get those fundamentals, go back and watch episode 1. Once you understand the fundamentals of what I presented to you, then you can start working through what style of trader do you want to be, right? So where I last left off, I started on the monthly, right? I started off on the monthly. So let's pull up the quarterly shift. Boom, this tool right here. If you missed it, go back and watch the first episode of these courses that I'm doing. So the quarterly shift, right? What is the quarterly shift? Well, every 3 to 4 months, there is a shift in the market, right? The market from a long-term perspective. If you're sitting in a trade or an investment for 3 to 4 months or longer, that is long-term investing. That's long-term investing. 1 second. That is long-term investing. Let me mute my phone right quick. 1 second, y'all. 1 second. I gotta put my phone on airplane mode. All right. So, well, damn. 1 second, y'all. It's pretty rude. 1 second. I gotta cut my phone off. All right, so long-term investing, right? Last time I left off, quarterly shift. And every 3 to 4 months, the market makes a shift in price, right? Every 3 to 4 months, the market makes a shift in price. 1 second. Okay, so every 3 to 4 months, the market makes a shift in price. So if you had to put a position on or a long-term investment into something, I consider 3 to 4 months long-term, right? Anything longer, that's super long-term when in the world of day trading, right? You might not be a day trader, right? You might not be a day trader. Who all in the building right now is more of a long-term investor? And you're trying to grow skills to develop into a more specialized investor, meaning you know how to day trade. Anybody? All right, let me just cook then. Let me cook. Low engagement. A lot of people hasn't came in yet. 1 second. Okay, AWB. Yes, understood. All right. So long-term investing, how do we view that from a technical perspective, right? Long-term investing. Well, starting on the monthly time frame, which is the institutional time frame, right? Institutional time frames are monthly, weekly, and daily. and longer time frames. The institutions, they view the markets from these time frames, right? So you start on the monthly. And remember last episode I went into the quarterly shift. Every 3 to 4 months, the markets makes a shift in the market. That's a long term, right? Quarters, every 3 months. So in long-term investing is kind of simple, right? Kind of simple. You pretty much wait for price to come to a certain level at a discount level. What I'm gonna do is I'm gonna pull up the continuous. Well, I'm gonna stay right here on the current contract. You're gonna want to wait for price to come to a discount level if you're bullish, right? And it's gonna drop down. You're in a position, and what you're doing is you're holding it. You're holding it for several months and sometimes weeks. That is called position trading, right? Let's go down to the weekly from the monthly, right? So let's just say on the weekly, right? On the weekly time frame, there is a down close candle, which is considered a bullish order block. So what I'm gonna do is I'm gonna highlight this down close candle right here, right? Bullish order block. And then I'm gonna drop down to a daily. And you can't see that price action, but let's just say over here, you entered in this area over here, you put on a position long term, and you're essentially gonna hold it until it hits a higher time frame objective over time. And see, this is gonna make me want to pull up the continuous. So let me pull that up right quick. They're forcing me to pull up the continuous because there's not enough data. So let me pull up equities, NASDAQ, and let me just show you right quick what I'm trying to demonstrate. So again, monthly time frame, position trading, long-term trading. Price drops down, right? A few months ago. Well, back during this time frame. And let's just say it drops down and it goes into a specific area in price. And let's just say that specific area is specific area in price is around right here, right? I don't like that neither. I don't like that. Let's say right in here, this fair value gap area. So what I'm gonna do is I'm gonna highlight this fair value gap. And I'll go more into details of fair value gaps in other episodes. Well, let's just say right here, right? So there's a fair value gap that forms right there. And position trading is pretty much you're waiting for this monthly time frame, right? You own this monthly time frame. You see it breaking out higher. It creates this fair value gap and price is going higher. Well, I teach you that this is a level of interest for smart money because a fair value gap is a void in price. It's an inefficiency in price. I teach you that the markets are algorithmic. So what the market is usually going to want to do is it's going to want to refer back to this level, and it does so over time. So each one of these candles are monthly candles. Every monthly candle has about 30 to 31 days in it, except February, which is like 28 days. So eventually over time, price goes up, right? It goes up, it's leaving you. It's going into a premium. Should you be a buyer as price continues to go higher? Y'all answer me, let me know in the chat. Should you be buying and chasing the market if price is going higher? Or should you kind of wait for it to offer some type of discount? Y'all let me know in the chat. Should you wait for some type of discount? Yes, AWB, wait for a discount. So position trading is waiting, being patient. Yeah, waiting for being patient. Shout out to you, Shep and Dorelli. So you should wait. So position trading is sitting on your hands, right? You just sitting back analyzing the chart and allowing the price to come to a level where you want to seek it. And then when it comes down to this level, you start working your way down. So from the monthly, you go down to the weekly, right? From the monthly, you go down to the weekly. And you can see over the span of several weeks, maybe even a month, price starts to come down. Each one of these candles represent 5 days of the week in the traditional market. So there's only 5 trading days, and that represents 1 week. So you can see when we decline down, it takes, yeah, 1 second, y'all, 1 second. 1 second. So yeah, over the span of a few weeks, right? Over the span of a few weeks, price trades down to a discount. Price trades down to a discount in that monthly fair value gap. You can see it trade down into that, boom, just like that. So whenever it trades down into this level, then you start working your way down to lower time frames. When you're a position trader, you go as low as the daily. You go as low as the daily time frame. Let me find myself. When you're position trading, your time frames for entry, monthly, weekly, daily, and you can see it eventually drops down there, right? It drops down to this time frame. When it drops down to that time frame, you wait, right? You wait to see if there's some type of reaction. You wait to see if there's some type of reaction, right? It drops down, it takes out sell side liquidity over here to the left. Takes out sell side liquidity over here to the left. Boom, just like that, right? And it drops down to a discount. Monthly time frame, monthly fair value gap takes out liquidity. I'll teach y'all that more into detail in future episodes. But right now, we're just trying to determine what kind of trader you are. But when it drops down to that level, it displaces higher and you're kind of waiting. And then it forms a down close candle right here. This is a what? Y'all tell me in the chat. What kind of candle is this? What kind of candle is this right here? And this is a daily, right? This is a daily. What kind of candle is this? This down close candle. Down close candle. What kind of candle is that? AWB, yes. Order block. Order block, right? Bullish order block. So it trades down into a monthly fair value gap. It displaces higher, and then eventually price will return back down into it, right? It returns back down into it, and that's your opportunity to accumulate. Yes, you can get down. Check it out. You can buy at this right here, right? On lower time frames. But because you're a position trader, a long-term trader, you're not trying to drop down. You're going to mainly stay on the daily for entry points. Anything below the daily time frame, you go into intra-week, intraday price action. Remember that. Write that down. Anything below the daily is intra-week, intraday price action. So as long as you stay above the daily, as long as you stay on the daily and above, you're long-term. You have a long-term view on the market. So this is a daily. We're talking about position trading, which means we're trying to hold a position for weeks and months at a time. So it drops down, takes out liquidity, displaces higher. And when it returns back to this order block, you're looking for an entry point. Boom, just like that. And what you do is you put on your order, your position, your investment, and that's your discounted entry. And then over the span of time, which is the next few weeks, next few days, what does price do? It rallies in your favor, right? It rallies in your favor, and it starts to go higher over time. And over here somewhere on the left side of your chart, there's probably some old data that it's trying to reach for. From entry, let's say you enter on this candle right here. And I'm going to put my ruler over here directly on that candle. You can measure how many days, how many weeks price went higher. And it roughly went for about 51 days, right? That's about 51 days right there. It goes higher for 51 days. Is that long term? Is that multi-year? I'm not trying to hold, me personally, because we're not insiders, right? We don't really know. We don't really know how far a particular asset can go multi-years. Over time, yes, it can go straight up, right? But holding a position, whether that's a stock, whether that's a crypto, whether that's futures or commodity, holding a position for 51 days, is that too long or is that not long enough? Y'all let me know in the chat. Shep, you said no, that's more of a swing trade time frame. Yes. 51 days to me That's in between a swing trade and a long-term trade, right? That's pretty much a long, that for me 51 days is long term, right? That's long term. That's pretty much almost 2 months. Almost 2 months, which that could be a swing trade as well. So swing trading and long-term trading, they're like one and the same. They're kind of the same concept. Just only swing trading, you're probably holding a position for a few weeks. Long-term trading, which is investing long-term, can last several years. Because look, check this out. Let's say you enter right here, right? You enter at this order block that I highlighted, and you hold for 50 plus days. You hold up here until it peaks out right there. 52 days. And then let's say you're somebody who thinks of, I'm a hold long term, right? I'm a long term investor. Well, if you're going to be long term investing for several years or multi years, then you're going to have to sustain something like this, where it turns around and sells off, right? It drops down and it sells off. So your original position, check it out. Watch when I draw this order block all the way over to the right. Your original position, you had a perfect entry point, right? But over time, you allow that position to come right back down where you enter and probably go in the negative temporarily. It went into the negative temporarily. Is that random? So that's why I proposed the question, what kind of trader are you? Are you a long-term investor? Do you want to really sit there and think long-term investing in these conditions, in these markets is the best thing? Or would have preferred to enter right here and swung this market for a few months, 2 months at max, and then potentially got out the market and paid yourself? Which one makes more sense? I'm not discouraging nobody from doing anything, but which one makes more sense? Anybody? Which one would you rather do? Well, Daryl, I haven't got into short term, right? I haven't got into short term trading yet. This is long term and swing trading. Shep, I want to swing low to high and vice versa. Well, Shep, you can swing low to high on all time frames. You can swing low and high in all time frames. I can drop down to any time frame and show you where there goes a swing right here. It's all relative, but how long are you willing to hold that position? Are you trying to hold that position for months at a time, weeks? Are you trying to hold that position short term, which is a few days? Short term trading is a few days. So let me explain that to y'all. Long term investing, right? Few weeks to several months. Swing trading. Swing trading can be a few days to several weeks. Also, it can be also several months, like not several months, but I say a few weeks at a time. Swing trading. It could go probably past a month, a swing trade. It's all depending on what the market is trying to do. So swing trading is like a hybrid. Like you might be willing to hold a trade for 2 weeks. You can hold it for a week. You can hold it for a month or two. Swing trading is a hybrid. And then you also can swing trade on low time frames. There's swing trades that's going on high frequency time frames. So swing trading is just a term, but the question is, what kind of trader are you? Do you want to hold something for a very long time, thinking it's like, bringing you value over time? Or do you want to hold something in a short period of time and capitalize on it and put that capital back to work, right? Do you want to put that capital back to work? Olive, what's up, Oliver? We waited 3 years to break $2. Yeah, man. Shep, 10 to 30 days. So Shep, you want to be somebody who holds a position 10 to 30 days. All right. And listen, let me explain to y'all. In the beginning, right? You're not going to, once you start doing this, you're going to constantly change who you want to be as a trader, right? When you start doing this, you're going to constantly change on who you want to be as a trader. Shep, I do not want to just hold for years. I'd rather compound in between. There you go, Shep. There you go. But I'm gonna leave that to y'all to understand what style of trader you want to be. Right? Me, let me tell you my personality. I like to compound and continuously put my capital to work. That means I like a little bit more frequency, and I don't like to sit around, because one of these moves can happen where it runs up for several weeks, several days, several months. And if you get comfortable with it going higher, you know what I'm saying? Your portfolio, your crypto, whatever is going up, your equity. And then eventually it starts peeling back on you. And you will sit there like a deer in headlights and watch it come back down on you. And you'll see it come all the way back down to your entry point. And now you're back at where you started. That's the most frustrating thing you can do, because you didn't pull any profits in here. But if you're somebody who's long-term investing, well, I don't know why. See, that's why I'm moving away from I have moved away from long-term investing, because I got the skill set now. But why sit through this right here, this pullback, and then wait several months for it to go back up, when there was opportunities going up, going down, going up, going down, going up, going down, going up, going down. There's many opportunities in both sides of the market. But people that are long-term investing, they're only thinking one direction, and they're potentially losing opportunities to capitalize in different styles of trading. Right? So what I just went through was long-term investing. Let me read the comments. Shep, I spent the last year married to my assets. Not doing that again. Waste of time. Yeah, man. Yeah. XRP. Once you learn this skill set, right, you don't have to be married to nothing. And cash becomes king, right? Cash becomes king. Again, cash is still king. I didn't realize that until, you go deeper into trading. Cash is still king. Yes. What do people do? They buy assets, they let them appreciate, and then they sell assets. And when they sell their assets, they sell them into cash. Well, for people that don't have this skill set, I would say stay in assets, right? Accumulate as much assets as you need. And I still believe in that. But once you start getting this skill set right here, right? Once you start understanding the capabilities that you have, then you can out compound any asset that you're in. You can outperform whatever you're long-term investing in. This right here can outperform anything that you're doing long-term. And it can do it quick. What's up, Jay Manson? Appreciate y'all joining. Make sure y'all smash that like button. If y'all are just joining, right, I got 14 people in here. I would like for everybody to engage. What style of trader are you? That's the question for the night. What type of trader are you? Are you somebody brand new? Are you somebody just getting started? I'm trying to help people figure out if they're going to pursue this. What's your style? Right? What style of trader are you? But anyway, what I just outlined was I showed you that this was a position trade, which is long term. To me, 2 months is long term. And if it rallies up like this particular market is the NASDAQ, it went from 17,000, right, all the way up to 20,000, right? From 17,000 all the way up to 20,000. That is a massive gain in this particular asset market, right? This particular asset class, right? J Manson, you said silver bullet trader. Silver bullet is a scalping model. So you're a scalper. You're a scalper. So, all right. So that was position trading. Now let's bring this back. I gave you a mix between position and long term. Short-term trading is holding a trade for a few days at a time. You're not holding for months. You're not holding for weeks. You're pretty much trying to be in it. You're trying to get in a position and be out of it probably within 3 to 5 days. Within 3 to 5 days. So what would that look like? Same blueprint right here on my chart, same blueprint. Price trades down into a monthly fair value gap. We trade down into the liquidity, sell side liquidity, right? We displace higher. Displacement is rapid movement in the opposite direction. So we drop down, make a little U-turn, and we rapidly shoot higher, right? After hitting a key level. And then we trade back down into the order block right here. This is your entry. Let's just, for precision sake, let's get a little bit more precision. For precision, we'll just add this BISI right here. And let's just say you got in at that BISI, which is a buy side imbalance, sell side inefficiency. I'll go more into that at later videos. But BISI, right? We enter at this fair value gap right there. Is that not random? Look at that. Is that not random? No. But we're using the order block for an opportunity to get in. Trades down into the BISI. Now, what would that look like? This candle right here, right? Let's count to the right. Well, before I do that, y'all in the chat, let me get the participation. What kind of candle is this up close candle right here? What kind of candle is this up close candle? I'm going to highlight it, give y'all a hint. I'm going to use the opening price right here. What kind of candle is that up close candle? AWB, bearish order block. The rally, bearish order block. Yep. Hey, man, y'all, come on now. Yep, bearish order block. So, yeah. So, let's just say short-term trading, right, where we're not willing to sit in positions for months. We're not willing to sit in position for weeks. We're trying to get in and out. But short-term trading is a few days, 3 to 5 days. Sometimes it can go longer, but I'm not trying to hold nothing over the weekend because the markets are very volatile and you don't know how they're going to gap. So I'm going to say anywhere between 3 to 5 days, probably less. So let's say we enter right here and we go to the right. Right there. You get in at a discount. You take it higher for about 7 days, right? That's about a week. Boom, right there. You hit a key level, bearish order block. You're out the market, right? You're out the market just like that. You take a position at from discount, profit right there. Yes, it runs higher, but as a short-term trader, you're not necessarily concerned about that, right? You're not necessarily concerned about how high it can go. You're just trying to get in, get out, and then guess what? After you take profit, you give it a few days or give it about a day. Let's zoom in a little bit. We got a volume imbalance plus fair value gap right here. So what I'm going to highlight is this. Highlight the volume imbalance, which is this. That's a volume imbalance right there. But you must include the fair value gap right there. Boom. Look at the precision. Now, once you take profit, right? Remember I said I like to put my money to work, right? Rapidly. I don't like to just sit in a position. I want to put my money to work constantly. Meaning I'm not holding it, but I'm just getting in and out. And then, so, okay, you take profit right there. Remember, these are daily candles. So you're waiting a whole 24 hours. You don't know that this market is going to expand higher in the upcoming days. You don't know that. You're just trying to get in, get out. You're taking surgical strikes. In, out, boom, right there. And then this market creates a BISI right here. Price trades down into it. Let's say you enter inside the fair value gap right here. You place your entry. And first of all, what are we aiming for? You see these highs over here? All these equal highs. These are buy side liquidity pools. Right there, right? That's your target. That is where liquidity is resting. Buy side liquidity. Right there. So what price does, it drops down into the BISI, right? It drops down into the BISI. We're going to enter at the middle of the BISI, and we're going to take this trade up from entry, and we're going to ride it up for 5 days. Boom, right there. 5 to 6 days. You're out the market just like that. Right? Out the market just like that. You take profit. So I just showed you 2 trades within the span of about 2 weeks, right? 2 trades within the span of about 2 weeks. Boom. Now that's not, just listen to what I just said. 2 trades, clean trades in the span of 2 weeks. Roughly 2 weeks. How many days was this? Let me show you. From first entry right here to this high right there. That's 15 days. Yes, 2 weeks. Short-term trading isn't day trading. Get that understood right now. Short-term trading is not day trading. You're not trying to get in there, get out. You're not trying to get in, get out, get in. No, that's not day trading. Short-term trading is finding high probability trades, and you're not over trading. You're looking for clean setups. You're trying to get in a position. You're trying to hold it for a few days. You're trying to get out at logical levels, premiums. If you're bullish, you're trying to get out at a logical premium level, take profit. You're done. That's short-term trading. So does this style right here fit your personality? Does short-term trading fit your personality? Y'all let me know in the chat. Which one makes more sense for you? Smash that like button, subscribe, share the video or the live stream. Does short-term trading fit your mindset? Now, who is short-term trading for? Short-term trading, right? Short-term trading is for people that are busy, that got to work a 9 to 5, right? People that have to work full time. You got other businesses, you got other obligations. You're not necessarily trying to be in there. Short-term trading is for people who don't have the patience of sitting for long, but it's also it's flexible for people who have to work their jobs, because all you're doing is you're waiting for setups. You're waiting for these setups to form. Derelli, he said, sounds like me. Shep, short term for me. Okay. The short-term trading is for people who have a 9 to 5 job, where when you enter a position, right, you're going to enter a position. Now you're going to have to sit through some drawdown. Jay Manson, you said you? Nah, Jay Manson, I think you more day trading, bro. You day trading. You a scalper, Jay Manson. But you might try to grow into this. I don't know. For people that want to hold a position, right? So if you're somebody who have to work a job, you have to kind of like find a way to stalk the market, right? So when the price is dropping down, right, you're waiting for weeks. Let's say you're bullish. You're waiting for weeks or whatever. You're waiting, and it comes down to this level, right? You can even be selling this down as well, right? You can sell this market down, but let's just say we've been waiting for it to come down to these levels right here, and it finally drops down to this level on this day right here. It drops down to a discount on a Friday, right? So at the end of the week, it drops down, takes our liquidity, close. The next week on Monday, it goes higher, right? The next day on the Tuesday, it goes higher. And when it goes higher and trades through the opening price of this candle, the order block becomes activated. Now, once it becomes activated, and it closes right above it. The next candle right here trades down into it. Boom, just like that, right? Trades down into it just like that. So when it does that, right, then you can start considering, let me be a buyer right here. So you're going to put on a position right here in this area, inside of this order block, inside of the order block. You put one small contract. Like, you don't over leverage. You don't put on multiple contracts. You're going to put on one contract depending on what you're trading. Right now we're focusing on the futures, NASDAQ, S&P. One small micro contract, boom, right there. And when you trade with low leverage, meaning one contract, it's flexible. You're able to be flexible, and you can sit through stuff like this next candle where it goes against you. Now, when you short-term trading, some of these trades are going to go against you, but your stop loss is going to be underneath this candle right here, right? You're going to place your stop loss. Let me show you. Your stop loss is going to go right here, right? Underneath that wick that creates the order block. Stop loss. But you're going to have to sit through some of this drawdown. So your trade might look like it's in the red, but you give it some time, it starts to go in your favor. And you're sitting through this for a few days. So here you are, you're going to work, right? You're living your lifestyle. You're just kind of like checking in on it, right? If it stops you out, no big deal, because you're going to manage your risk. You got to be able to calculate, okay, how much equity am I using? Am I using less than 1%? Don't go above 1% risk of your entire equity. So you're going to manage your equity. You're going to see it fluctuate, right? But in a few days, it eventually goes in your favor. And you already got a preset limit order to get you out the market right there. Boom. Soon as it trades up into that, takes profit. How many points would that be? Let me put some figures to that for y'all. Let's say we enter right here at the middle of this BISI. It goes up just like this. Boom, just like that. That's 715 points. Now let's pull out the calculator. And we're referring to the NASDAQ. Let me read this chat right quick. Let me read the chat. AWB seems great for flipping stocks and adding to your position. Yeah, this is great for stocks, right? So if you're somebody who likes stocks, this is what you do. Futures trading, it can get interesting. Naquan, I'm bullish till Jerome Powell quit in April. Okay, Naquan, shout out to you, Naquan. But this move right here, if this was a short-term trade, this trade lasted, it lasted about 5-6 days, right? And it was roughly about 715 points. So if I pull out my calculator, let me pull my calculator out right quick. If I pull out my calculator, and we're going to do two versions, right? We're going to do the micros, which are $2 per point. And we're going to do the minis, which are $20 per point. This trade that I'm showing you went $715. So let's just start off for beginners. Let's calculate 2, which represents $2 per point times 715. That's $1,430. Okay, $1,430, and you sat through this for about a week. So for people that work, right? People that work their 9 to 5, people that can't really tend to the market, how would an extra $1,400 help you every week? You know what I'm saying? How much would an extra $1,400 help you every month? It doesn't have to be every week. Let's just say every month. An extra $1,400, how could that help you in your day-to-day? How could an extra $1,400 help you in your day-to-day? Make sure y'all smash that like button, y'all. Y'all got 13, 14 people in here. Make sure y'all smash that like button. I need the engagement. What's going on? How could an extra $1,400 help you in your week short-term trading, right? So I think that can go a long way. Now let's do somebody. Let me read. Shep, you said it can pay your house payment more. Extra $1,400 would be nice. Shout out to you, AWB. I know AWB. I know you want an extra 14 grand a month. Darrelly, sounds good to me. Yeah. So this is for people, short-term trading is for people who are kind of busy, but you want to get active. And you normally get about 1 setup per week with short-term trading, right? 1 to 2 setups per week, right? So you're sitting here stalking the market. You're getting a setup probably 1 or 2 times a week. Don't expect it. Don't demand it. Just wait. This trading style demands patience, just like long-term and swing trading. You have to wait for your setup. When it comes to you, you enter, you execute, you hold it for a few days, you get out. Short-term trading. Let's say this was a mini, right? So the micro was $2 per point, but if this was a mini, it would be 20 times 715. That's $14,300. $14,300. Right? One contract, just one micro and mini contract. In this case, a mini, it'll be $14,300. And in the beginning, I'm not expecting people to pretty much, this is doable, but you got to have equity, right? So some people that watch me got a lot of equity, which is amazing. So this might be fitting for you, right? This style of, this type of capital. If you have the capital, you can do this. No, not risking no more than 1% of your equity. But over time, check it out. Over time, right? Over time, let's say you do this in the span of 10 to 15 weeks if you're trading the minis. The micros. Let's say you do this over a span of 10 to 15 weeks where you're looking for one setup for a few days, you're getting out, you're consistently getting 1,000 to 14,000. Sometimes you might get more per week. not 14,000, 1,400. 1,000 to 1,400 per week, fluctuates. Over time, before you know it, you're gonna look up, you got about $14,000, $15,000 right there because you've been consistently doing the same thing over time. Then once you get that type of capital, 14, 15,000, now you can start scaling it way more. You can start adding more contracts. You can start scaling it up. Shep, you said that would pay my house payment for 14 months. Psh, one trade. Look, imagine, and you're gonna get there. If y'all pursue this, if you pursue this, right, you're gonna be able to get to that level where in the span of 5 to 6 days, right, you can pay your whole mortgage up, right? If you got a mortgage or if you got a major bill, imagine getting to the position where you can pay that up for a whole entire year in 5 days. I'm sure you'll be very comfortable then. Now compare this to long-term investing, right? Compare this to long-term investing where you have money in an investment, right? You have capital in, let's say, a stock or something or a crypto, right? Let's say you got money tied up into Bitcoin. You bought Bitcoin at $70,000, right? And now you're hoping that it can go up to 100,000 just to get some significant returns. But the thing is, it's taking months, it's taking years just to get back to certain levels. But in this case, your short-term trading in a derivatives market with leverage, you can start gaining traction faster than you can ever do long-term investing. Right? Makes sense? All right, that's short-term trading, right? You're just holding the position every so many days, X amount of days. All right, now let's get into, let me see. Let me come up to current price action. Because when I start dropping down the lower time frames, I don't think, let me go down to the, let's go down to a 15 minute. If I go down to the 15 minute, will it let me go way back here in price? No, it won't. So I'm gonna have to come to current price action, right? Now, after short-term trading, let's come down to day trading. So what I'm gonna do for day trading, I'm gonna pull up two screens. On the left, I'm gonna have the daily, right? On the left, I'm gonna have the daily. On the right, I'm gonna have a 15 minute. Right? On the right, I'm gonna have a 15 minute. So day trading is pretty much holding a position for the entire daily range. Holding a position for the entire daily range. So what do I mean by that? The whole goal of day trading is trying to get in a position, hold it for the daily range, and get out, right? So you have 24 hours in a day. So let's internalize this a little bit. Remember I told you, anything below the daily time frame is intra-week, intra-day price action. Now you're going into a different dimension where you're in the day trading realm. So let's vision this. Let's picture this. When I'm day trading, let's say I'm looking at this candle right here. When I'm day trading, I'm trying to cyber surf, right? I'm trying to surf this down close candle. I'm trying to capture the movement of the daily range, right? I'm trying to get inside of this candle on low time frames, and I'm trying to capture movement inside of this candle right here. As a day trader, I'm trying to capture at least 50 to 70% of the daily range, right? And then the next day, as a day trader, we open, we trade lower, and I'm trying to get at least half of this in the daily range. And then the next day, it opens down here and it goes up, right? So day trading is trying to capture the majority of the daily range. The daily range is the daily candle. Inside of that candle is a range. Y'all understand that? Is that too complicated? If y'all got any questions, let me know. So day trading, now let's get this understood as well. Day trading isn't everyday trading. Day trading isn't everyday trading. There's more things that goes along with day trading. I'm going to say that for another live stream where I go into more details about day trading, because there's something called bias, there's something called narrative. And if you don't have the components of a bias and a narrative, then day trading can be very hard, because you're going to think, I can day trade every day, right? I can get in here and every day and day trade. Day trading might offer you, let's say day trading might offer you maybe 2 or 3 good trades per week, right? So you might can get 2 or 3 good trades per week. So for example, let me just give you some context, right? Let me give you some context. We trade up, right? So what I'm looking at is the daily chart for the NASDAQ. We trade higher, and when we trade higher, we take out this high right here, right there. Y'all in the chat, what is this high representing? What kind of PD array? What kind of PD array is that in the chat? Yes, Shep, liquidity, buy side liquidity. Yes, AWB, buy side liquidity. Yes, J Manson, buy side liquidity. Right, buy side liquidity. Let me highlight this 1 second. All right, so yes, it's buy side liquidity. And when I say everyday trading isn't a day trade, well, this candle right here, this candle is a Thursday. It's late in the week, right? It's a Thursday. So we trade down, we take out liquidity. What smart money is doing, they're offloading their long positions, and then it sells off, right? Sells off, boom. And then the next day on a Friday, it sells off again. So Friday ended the week, and then here we are on Monday. So I'm expecting lower prices based on narrative and bias, right? Narrative and bias. In order flow, institutional order flow on a higher time frame. But on Monday of the following week, which is this candle right here, price trades down as if it's going to keep going lower. And then on the dime, it rallies back up and closes bullish. Now, this candle is a little deceiving, right? Because this candle at one point was looking like the candle next to it. It was bearish on that particular day. And then what the market makers did, they reversed it and sent it higher and closed it inside of this candle. This day right here, which is a Monday, is a day that you can filter out of your, just filter it out. Meaning this was a bullish day, but you're expecting bearish prices. So this is a day that I'm not going to consider the day trade. I'm going to kind of wait, because when it trades back up, it's trading into, first of all, it takes out the previous day's high, the next day, the Tuesday. It trades up, takes out this high right here. Let me show you. Takes out that buy side liquidity. Above that high, same concept. It takes out liquidity, it sells off. But in this case, it takes out liquidity right here, and then it sells off right there. Now, what does that look like on lower time frames? Remember, day trading is trying to capture the majority of the daily range, and you're trying to hold it up into a certain point. Let's go over to lower time frames on the right. So on the lower time frames on the right, I'm gonna go out to a 15-minute. And I'm gonna try to track back way over here, right here. On the right side of my screen, 15-minute time frame. All right, Monday's high, which is right here. This was Monday's high right there, right? So Monday's high over here on the right. Let me blow this up right quick. This is day trading, right? Day trading. The day, the algorithm, the day starts at 12 o'clock midnight. 12 o'clock midnight every day. That starts the new day. That's that vertical trend line right here, right? 12 o'clock midnight starts the new trading day. New York Eastern Standard Time, 12 o'clock midnight. So on this particular day, we formed a high on that Monday, which I have outlined right there. That's the high on that Monday. We cross over at midnight. We go into the London session, which is from 2 o'clock in the morning to roughly 5 in the morning. It goes up until 11 in the morning, but the kill zone is around 2 a.m. to 5 a.m., right? Trades up into the liquidity. What are they doing? They're offloading their long positions. They're collecting their shorts. They're accumulating shorts. Then we continue to roll over until about 5 a.m., about right here, right? They're staging the market. And then about 7 a.m., 7 o'clock in the morning, Eastern Standard Time, right here, that starts the New York session, which is the most volatile. The most volume comes in if you're trading equities. The most volume comes in during the New York session, right? There's a lot of interest in the New York session. So at 7 a.m. begins the New York AM session. There's a Dilling range. Remember the ranges? So what I'm gonna do is I'm gonna take the London high, which is right here, and I'm gonna bring it down to the 7 o'clock in the morning low right there. That's the Dilling range right here. I'm gonna set that up, Dilling range. And at 7 a.m. in the morning, the algorithm comes online. The algorithm knows it's 7 o'clock in the morning. The algorithm starts to kick in and starts doing what it does. But when it comes up, right, is it in a premium or is it in a discount? Y'all tell me in the chat. Is it in a premium or discount? Does the smart money want to sell at premiums or do they want to sell at a discount? Y'all let me know in the chat. Smash that like button, subscribe. And pay attention to what I just noted. I told y'all the day starts at 12 o'clock midnight. The New York session starts at 7 a.m. Oliver, premium. Yes, shout out to you, Oliver. AWB. No, it's not in the discount, AWB. Shep, premium. So it comes up to a premium, right? And when it comes up to a premium on the range, it offers you an opportunity during a specific time of the day, around 8:30 in the morning. When it comes up in the premium side of the range, there's a small little SIBI over here. Well, it's not small, but there's a gap right here. It's actually a suspension gap. So let me highlight this suspension gap, which is 2 volume imbalances. I'm going to show you what that is. Take notes. Suspension gap. Whenever you see a volume imbalance, see that volume imbalance right here where the bodies of the candles don't touch, they don't overlap, and there's a little gap right there. That's a volume imbalance. I'm focusing in on this candle right here. There's a volume imbalance right there. There's a volume imbalance right below it. You got to combine both of those candles, and both of those candles become a suspension gap. And we trade up into it, right? Trade up into the suspension gap. It's offering. What are they doing? Look at the precision. Boom, 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 boom. Offering themselves short opportunities. And at 8:30 in the morning, which a lot of times, what day was this? 8:30 in the morning, I'm going to pull up the economic calendar. This was Tuesday, February the 3rd. So watch this. I'm going to pull up the economic calendar. And I'm going to go back to that day on Tuesday, February the 3rd. Let's go to February. Let's go to the 3rd. Let me see. February. There was no news that day. Okay, I thought there was some news. So there was no news that day. I thought there was 8:30 in the morning news, but clearly there was not any news that particular day. So let's come back over to the chart. Trades up into the SIBI or the suspension gap. They offering themselves a premium, right? And the whole objective for day trading is holding this trade throughout the majority of the day, right? But you got to get out at logical levels. So when they enter, they're entering at a premium. This is a super low resistance liquidity run. It sells off. Sells off. What are they trying to get out at? Liquidity. Look over to the left. They're trying to get out at liquidity points, which is this swing low right here. Right? Sell side liquidity. The whole point of day trading is holding for the entire daily range. So what does that look like on the daily? Well, on the daily time frame, back over here on the left, this candle right here, it traded up, right? And when it's going up, they're putting their shorts in. They are selling as this candle goes up. When it goes up, it takes out the previous day's high, and then it drops. And when it drops, it goes a vast distance, right? When it drops, the drop as far as points would be, let's say from SIBI, all the way down to liquidity. Boom, right there. liquidity down to, from entry, which was the suspension gap, down to liquidity right here. Boom. So let's calculate the points, right? Now I walked y'all through short-term trading. I walked y'all through long-term. I walked you through swing trading. But on this particular day right here, the market offered 820 points. It went further, but we're trying to get out at logical. We're not trying to sit in the market all day. We're trying to get in, hold it for the majority of the range, and get out at logical levels. And then after that, you're done. But 820 points, we're going to show you the macro contract and, the micro contract and the mini contract. So the micro contract is $2 per point. $2 per point. 2 times 820. That gives you $1,640 in one day. $1,640 in one day. Again, what can that do for you? What can that do for you? Oh, my bad, y'all. That was not one day. So the day, check this out. The day ended. That was a Tuesday. It completed on a Wednesday. But we're not trying to, check it out, we're not trying to hold. We're going to reduce that right quick. We're not trying to hold. The whole point in day trading is not holding for the entire day. So let's just say hypothetically we get out at some type of level, and let's just say we get out right here at this low right here. These equal lows. You see these equal lows in here? Let's say we get out right there. That's our take profit. Right? And after it hits our take profit, it goes into consolidation until midnight the next day. But what we're going to do is we're going to price our entry from suspension gap down to liquidity. Now we're going to reduce that down to $540 points. One micro, $2 per point times 540 points. That's $1,080. What can that do for you in one day? Especially if you're somebody. Okay, who is this for? Who is day trading for? This is for somebody who works, right? Let's say you work, but you want a little bit more, you want to be a little bit more aggressive. You're tired of sitting there waiting for one setup per week, which is what short-term trading is. You're waiting for one good setup per week. Day trading might offer you 2 to 3 good setups per week, right? So now you're kind of graduating. You're in between short-term trading and day trading, where you might be somebody who is off. You might work a night shift, right? And you're able to trade during the day. Well, guess what? You're going to be able to be more frequent. You might be somebody who works a job. You might not, during the day, you might not be able to participate like you want to. It's taking up your time. And that's where short-term trading comes in hand. But both of them are ultimately trying to achieve the same goal, right? They're both trying to achieve the same goal. But in this case right here, 540 points, one micro, over $1,000. Let's say you add one mini, which would be 20 times 540. That's $10,800, right? One mini contract. Where will my stop loss be for that? Let's measure that. Where will my stop loss be for my mini? Well, in this case, you see this range right here. Let's measure how much we would put on the risk. How much are we willing to lose? Well, we got the BISI, right? The SIBI. We trade into the SIBI or the suspension gap. Your stop loss needs to be right here. Let me show you. Because you always got to calculate risk. Your stop loss got to be right there above this candle right here. How many points would that be? Well, let's measure from the midpoint up to that right there. 28 points. 28 points, right? So if we were trading one mini, you would do 20 times 28. You're willing to risk $560, right? $560. And this is for people. That might be a lot for some people. Like, I'm not willing, but no, that's no money in the grand scheme of things. For some people, $560 is like $50, right? So it's all perspective. It's all about equity. Everybody's situation is different. That's why it's a beautiful thing, because we can trade minis and we can trade micros. But 28 points, one mini, $560 for a profit of $10,800. What's the risk to reward on that? Is that not good risk to reward? Well, I'm willing to risk $560 of my capital for 10,800. What would that do for some of y'all, right? And it don't take much. As soon as it starts to go in your favor, right? As soon as it starts to lean into your favor, you can go ahead and cut all that risk off the table and roll your stop loss to break even to where you no longer risking $560. Imagine taking a trade that nets you $10,800 and you didn't have no risk on the trade. Precision. That's what I'm over here trying to teach y'all. Precision, right? What does it do the next day? Okay, we cross over at midnight. The next day. Let me show you right quick. I'm gonna go from midnight to midnight. Right there. So the next day would be a Wednesday, right? And on that Wednesday, what are we aiming for? Let's come over here. See this low way over here to the left of my chart. I'm gonna outline that, drag it to the right. The next day on the Wednesday, right? Next day on the Wednesday, price opens up at midnight, pretty much does the same function. It takes out these equal highs right here, right? Takes out these relative equal highs. Right here. It does it during the London session. Overnight, during the London session, takes out those highs. Price drops, right? Price drops right there. And when it drops, it creates a new dealer range. When it dropped, look to the left, it took out these lows in here and it traded into this BISI. But you got a new range from high to low, right? You wait for about 7 o'clock in the morning. Right there, 7 a.m., same freaking setup, y'all. Same freaking setup. 7 in the morning. It trades up. You got consecutive up close candles. See these 3 up close candles? These are one order block. These up close candles right here. This is one consecutive order block. Zoom in a little bit. Again, these 3 up close candles, one consecutive order block. Let me just highlight the lower order block right here. Opening price. You can enter right there at the opening price of that candle right here. Let me label it. Bearish order block right there. Trades into it. That's your entry point. Let's say you want a little bit deeper premium. Well, it can wick into this one right here. Right there. Order block. You can see it trade into that. And then let's just say you want to get real aggressive and you want to enter at the very top right there. Boom, right there. You can see, look at the precision. Can't make that up. Let's zoom in a little bit. Zoom in a little bit. Premium, super premium order block right there. And look at the precision. Let me move this out the way. Look at that right there. Is that not random? Is that not random or is that algorithmic? You let me know in the chat. Is that random or is that not algorithmic? And look at the precision by a few ticks. That is where the institutions are getting in. I'm not even expecting that because I'm not demanding that. Me personally, I'm just trying to get in sync with the move. I'm not demanding this much of a premium price to get in for my entry. They are reserving, who is they? The institution, smart money, them, the cabal, you know what I'm saying? There's a cabal out there, they're getting in at that level right there. Bing. And then it drops. They have no risk. As soon as it starts going in their favor, right? Their stop losses at break even is gone. And it goes, a significant amount of points, right? So let's just say you enter back here though. Let's say you enter right here. That's going to be our entry point for this example. That entry right there is still a great entry. Great. Supreme. Most people don't even know about this shit. Most people don't even know nor are aware about this type of price action. It trades right up into it. Boom. Just like that. And then what does it do? It drops, right? And what is it aiming for? What the levels that we had outlined the day before. You got the previous day's low right here. Previous day's low right there. You got this low right here, which from the previous day, and you got a low from weeks ago. Boom, right there, right? So that's your target. And when it drops, let's say you enter at that order block where I highlighted, your entry point, and remember, we're day trading. We're trying to capture the majority of the daily range. You might have to go back and rewatch this. And it goes into more detail. That's why you have to get with me so I can mentor you about how to do this. but it trades up into this, boom, and then it drops. And when it drops, that run goes for about 263 points down to about 300 points right here. Let's do 310 points. And once it hits your target, you don't care about, well, let's go ahead for completeness sake. Let's go ahead and for completeness sake. It's order block right here, down to the very low right there. 460 point run, right? You don't demand no more than that. Hell, you can get out before that. You can get out at each one of these levels. But again, after the day before, a 800 point run, and then the following day, a 460 point run. So let's do the math, right? Let's say we did a mini the day before. We netted $10,800. And then the following day, on a Wednesday, come back to the market, and we get another 460 points. So it'll be 20 times 460. That's 9,200 right there. So in 2 days, we've netted over $20,000 in 2 days with one contract. We netted over $20,000 in 2 days with one contract. So you take 9,200, which you made on a Wednesday, and combine it with the 10,800 that you made the previous day. That's $20,000 in 2 days with one contract. After that, let's look at the daily. So that's what it on the daily over on the higher time frame on the left. You captured on a Tuesday. Appreciate it, Dorelli. On a Tuesday, right? On a Tuesday, you captured majority of the daily range over on the left. And then on the following day, Wednesday, it drops some more. When it drops, there goes those levels that I outlined, right? I wasn't just outlining any level. I was outlining key levels. You can see it go exactly to those lows. And then on the next day, or Thursday, it goes a little bit further. And when it drops further, right? Let me pull this up right quick on the left. The third day of the week. Remember when I said day trading isn't everyday trading? You might get 2 to 3 good setups per week, right? Same with short-term trading. You might get 1 setup per week or none. When it drops lower on the third day, which was a Friday, it trades down into this level right here. Y'all tell me in the chat, what is that right there on the daily time frame? What is this? What is this level right here? What kind of level is that? Well, on that Friday, it drops directly down into that level. And I'm going to show you what that looks like the following day. Yes, the rally of volume imbalance. Volume imbalance. So let's come back over here to the lower time frame, right? Yep. What's up, TZ? Yep. The following day, right? The following day, we start at midnight, which is wait. Right here. I lost my days of the week. 1 second. Wednesday at midnight, and then we come over here to Thursday at midnight. Right? The following day, Thursday, 12 o'clock midnight, which starts the brand new day of trading, Eastern Standard Time. And on this particular day, right? We open up at midnight. It creates a range. So you got a high right here. Swing high, down to swing low. Same exact thing the next day. I'm giving y'all too much information, bro. I ain't supposed to be giving this up. This is supposed to be reserved for my my community, my Patreon, right? But I'm doing it for free. I'm showing y'all. I'm actually showing you a model, right? If you're not paying attention, if you're not understanding what I'm showing you, this is a one model within itself. You're waiting for 12 o'clock midnight to get the entry point around London, and I'm showing you a complete model. So I don't know what else to tell you, but look, 12 o'clock midnight, I showed you this 3 days in a row, and this works when the market is trending. Now, y'all in my Discord, we haven't seen trending days in so fucking long. You know what I'm saying? Excuse my French. We haven't seen trending days in so long. We've been compressed in a tight consolidation at the time of this recording, which is March the 16th, 2026. We haven't seen range days in so long, but whenever we do get range days, this is what you start seeing consistently every day. It's too smooth. It's too easy to identify, right? But we need to get there. These markets need to loosen up. And whenever I say these markets need to loosen up, this is what I'm saying. We need to start seeing this right here. But this high right here, down to that low, we cross over at midnight. We go into London. When we trade up into this range Are we in a premium or are we in a discount? Are smart money trying to short at the premium or are they trying to short at the discount? Very simple. Price opens up at midnight. They go into the London session. It trades up. Look to the left, right? Start looking to the left. We're in a premium. We're inside of a dealing range. We open up at midnight. We go up. We trade into what? Look over to the left. What is this up close candle right here? What is this up close candle right here? What is this up close candle right here? Boom. Yes, Derelli. I think that's your PD array, Derelli. Bearish order block. Trade right into that. Look how the price reacts to that right there. Look how price reacts to that bearish order block. Is it random? We need the shirts, right? We need the shirt. Is it random? Look, boom, 1, 2, 3. 3 wicks into that order block, right? 3 weeks into that order block. Let's say you don't see the order block. Let's look a little closer. Y'all in the chat, what is this right here? What is this? I can hit you with all kind of concepts. What is this right here? Yes, the rally Sibby. Some of y'all might see the order block. Some of y'all might be to see the Sibbies. Or maybe you're universal. You might see it all. Right? You might see it all. But look, it trades up into the order block, which is on the premium side of the Sibby. You notice? Midpoint of the Sibby, the upper portion of it, premium. Price is on the premium side of that. Trades into it. Boom. Trades into it again. Trades into it again 3 times. Then it drops, right? It drops. Goes down to the discount side of the range. Then guess what? It comes back up to the premium side of the range, trades right back into the Sibby. As you can see, right, it's declining. They are before it starts to drop, you can see it's making lower highs, right? They're not really trying to come up any higher, and it continues to make lower highs, right? Just like that. They're showing you the signal that this is about to drop. This is about to drop, making lower highs inside of the PD array, showing weakness. All right. And then one more rally right here, this candle right here, trades into, boom, look at the precision. Look at the precision of that. Let me toggle this right there. Look at that last candle before it drops out the bed. And what time does it drop out the bed? Well, 7 o'clock in the morning. I'm giving you a complete model right here. 7 a.m. Right there. 7 a.m., 7:15, market gone. It's gone. Right? It's gone. And when it drops, remember I outlined on the daily, here it is, daily volume balance, boom. So let's just say we enter near my order block because that's where I'm trying to get in at. I'm trying to get in near the order block right here. And then it drops down, let's say to the middle of the volume imbalance. 3 days in a row, the first day, 800 points. Second day, 460 points. Third day, 735 points, right? Let's calculate the third day in trading. First 2 days, we used minis. We made over $20,000. On the third day of the week, you take 20 times 735, 14,700. Add that with the 20,000, $34,700. You did it in 3 days, right? You did it in 3 days. Now, that might sound unrealistic, but this is day trading, right? This is day trading where you're holding for the entire range. Now, sometimes day trading isn't working like we are right now. These are trending days, right? This is when the market is trending one directional. When it's trending one direction, market is like a piece of cake, right? It's so easy. But if I kind of like come to current price action where we are now, right? It's not really trending. It's not really offering much. It's doing some weird shit. It's high resistance, right? Not really trending. You got to deal with this right here. Let me zoom in a little bit. So whenever the market does this right here, where it goes into these conditions right here, where you see this back and forth, it looks like a barcode. It's whipsawing back and forth. This is high resistance conditions, right? And I'm going to get into that. But before I get into that, I walked you through long-term position trading. I walked you through long-term swing trading. I walked you through short-term trading. I walked you through day trading. Which one fits your personality? Which one resonates with you the most? Which one resonates with you the most? Which style of trader are you? That's the question. And in the beginning, you're not going to know. But maybe I'm giving you an idea of what that looks like by walking through these time frames, right? So when I zoom back out on the daily, those 3 days right there on this week right here, like it was a Tuesday, Wednesday, Thursday, each day over, each day was well over 1,000 points, right? If I had to measure from this swing high right here down to that low right there, that week right there offered over 1,600 points, right? That week alone offered over 1,600 points, one direction. But now we're currently stuck in this condition right here, this sideways trading, right? Nobody answered my question though. Which style are you? Which style am I switching the idea? Are you starting to switch your perspective? Shep, I like to become a scalper due to work. Shep, if you're working, Shep, you won't have a lot of time. Well, I can't say that. I can't say that. Everybody's situation different because you can work a job and still be a scalper. You can fit it in, right? Or it's different spectrums, right? If you can't trade because of work, well, you can kind of I'm gonna tell you now, like scalping, it requires you to be more engaged in the market. But if you can't be really engaged, maybe short-term trading benefits you the most. TZ, focus on day trading for now. Plan to grow into swing and then short-term. Okay. AWB, day trader scalp till the cows come home. Yeah, AWB, you done seen the light, right? You done seen. Now, like I said, my personality, right? I haven't short-term traded in a long time where I enter a position because we all know in this market right here it's too volatile. The gap's been crazy. So I primarily prefer, me personally, I prefer to be a short-term trader where I can get a position, manage it for a few days. I haven't seen that in a while, right? So I had to grow into day trading. Well, that day trading was my second alternative where I prefer to hold for the daily range. But guess what? If we're not trending one direction and the market becomes very choppy like this, let me show you. If the market becomes like this right here, then day trading is out the window. You can count that out, bro. You can count day trading out the window. It's not one directional. You can see it goes up, goes down, goes up, sideways, gaps, sideways, up, down, sideways. It's being held. This is what we call being held. I like to call it barcoding, where it's just back and forth. It's like taking a paint roller and going back and forth in the same spot. That's what price is doing right here. Let me read the chat. Shep, LOL, I run equipment. I listen to you in my skid steer. Okay. Shep, and my machine has a phone holder and Bluetooth. Okay, Shep. You might be good then. You might, like I said, everybody's current circumstances are different. And you're going to have to learn how to fit this in. You're going to have to make it a lifestyle and learn how to fit it in, right? Pause. Dorelli, you got to get a tablet and hide it at your job to get the scalps in. Yeah, pretty much, right? So depending on what you do, some people can have tablets at their job, some people can do that. Make sure y'all smash that like button, bro. Smash the like button. So now let's get into scalping. So I went from position trading, swing trading, short-term trading, day trading. The next style of trading is scalping, which I've been having to be a scalper as of lately. So for a scalper, right? How do you trade in this shit right here, right? How do you trade in all of this mess right here? So first thing you need to do is you need to determine the range. Start on the current candle, go back 20 days, right? 20 days. And that's going to be our operating range. So you find the high to the low. Now go back and watch the video I showed y'all yesterday and combine it with today, right? Combine it with today. High to low, find the range right there. So inside of this 20-day range, right? Inside of this 20-day range, you can clearly see price has gone down. It has gone up. It's been trading in and around premium and discount for some weeks now. You know what I'm saying? It's been several weeks. Now, what I just showed you with day trading, price was one directional, traded to its destination in one day. In 3 days. But this right here, this is roughly about, from high to low, this is about 14 days of price action right here. This is 14 days of trading. And we've gone nowhere, but it's slowly creeping lower, right? So I'm bearish. But how do we trade in this? All right, for me, this is what you got. Now write this down. In the beginning, now as a scalper, you can trade both directions of the market. As a scalper, it doesn't matter. It doesn't matter what side of the market you're on. As a scalper, you don't have to have a bias. You don't have to have one direction. This is where I'm going. But it's best to have that mindset. I'm only choosing one side of the market. So when the market has been in this condition, right? Let's give it some context. Let's give it some narrative. A few weeks ago, price traded high, right? When it traded up, what did it do? Let me hide this. When it traded up, it swept this high right here, which is buy side liquidity. It swept that high right there, buy side liquidity, right? Now, the same concepts I taught y'all with the day trading applies right here. Right here. Takes out buy side liquidity. Let me label it. Previous day's high. One second. Let me find my tool right there. AWB. Volume imbalance. Oh, yeah, the volume imbalance. Okay, I see it. I see it. I see that. I'm going to leave it out for now, though, AWB. You see it, but I'm only referring to the liquidity, right? I'm going to refer to the liquidity. So this particular day right here was a Wednesday, right? It was a Wednesday. So we're going to go inside of this right here. I'm going to zoom down to lower time frames. On lower time frames. Right there on the right. Let's go down over here to the on the left is going to be my daily. On the right, I'm going to use a 5 minute. When you're a scalper, right? The 5 minute time frame is like your higher time frame. So you see over here on the left, right? You can see we got relative equal highs right there. That's liquidity. And then on this particular day on the Wednesday, check it out. On this particular day on the Wednesday, they take out that high right there, right? Take out that high. And then the market closed on the Wednesday afternoon. It closed right here. That's why you see this gap. I'm going to highlight that gap for y'all. Let me measure this gap. So you take the closing price, and y'all going to learn something. Closing price and the opening price. So if you don't know, the market closes around 4:55, 5 o'clock, and it reopens around 6 o'clock every day. So it's a small little hour close, right? So check it out. The market closed, it reopens, right? And when it reopens, it just chops around. There goes another range as well. From this high, right here, this swing high, down to this swing low. This swing low right here, right? This swing low. That's a little micro dealing range on the 5 minute. Oh shit, 1 second. All right, so check it out. I'm gonna show y'all some scalping. It trades back up to fill in this gap that it created when the market closed. It trades back up to fill in that gap, right? But you gotta wait through time, and then on this particular day, I'm gonna show you. 12 o'clock midnight. 12 o'clock midnight, which is right here. 12 a.m. starts the new trading day. So we cross over into that realm, the new day. We trade up during London. London session is from 2 a.m. to 5 a.m., right? It can go out to 11 a.m. That's the session. But it trades up and it trades higher, and then 7 o'clock in the morning. We're 7 o'clock in the morning. I'm giving you foundation. Nothing has changed, right? Nothing has changed. 7 o'clock in the morning right here. Boom, right there. So once we hit 7 o'clock in the morning, we start the New York AM session. So when we trade up during the New York AM session, where we start the New York AM session, it trades up into the gap that I got highlighted. And when it trades up, look over to the left right here. What kind of high is that right there? Anybody know? What kind of high is this right here? Right there. What kind of high is that? Which high is that? Smash that like button, subscribe if you're brand new. Yes, Dorelli, buy side liquidity, right? It is the London session high, right? It is the London session high. We cross over into New York. Yep, AWB. We cross over into New York, and what does New York do? It trades up to take out the London session high, right? So what's the purpose of scalping? What's the purpose of scalping? Scalping is to get in, get out, get in, get out. And you're not a scalper, right? A scalper's personality. I'm gonna put this in perspective for y'all, bro. I'm gonna put this in perspective. It's a paradigm shift. It's an eye opener. So you remember the day trading trades that I showed y'all, right? Where we held the market for 800 points, we held the market for 500 points, etc. You know what I'm saying? And you've seen the potential in that, and there's nothing wrong with that style of trading. I prefer that style of trading. But when you get into the realm of scalping, this is a 5-minute chart. Let's look down here at these little lows right here, right? Let's look. You see these lows right here? Y'all in the chat, what kind of lows are those? What kind of lows are these right here? Smash that like button if y'all just joining. What kind of lows are these right here? Equal lows. Yes, AWB, equal lows. They're sell side liquidity. What kind of liquidity? They're not particularly a session liquidity. They're just considered minor liquidity. Minor sell side liquidity. There's liquidity. Remember, go back and watch my first lesson on my first course that I did yesterday. And I talk about liquidity. And I mentioned that liquidity is found on all time frames. There's macro liquidity, session liquidity, previous days liquidity, previous weeks liquidity, long-term liquidity, and there's minor liquidity, and there's macro liquidity, like little micro liquidity pools. It's all throughout the chart. So let me show you this. This is a minor liquidity pool. Minor sell side liquidity. So let's go back to the draw on liquidity. The draw on liquidity at the premium side, because we're looking to go short, it trades up, takes out buy side liquidity. Now what we're going to do, we're going to work our way down to a 1 minute. Work our way down to the 1 minute. And if you don't know what I'm doing, I'm actually back testing. And this is how you get real good, by doing stuff like this, talking to yourself. Talking to yourself, right? So on the 1 minute time frame, right? We trade up, we take out the London session high. The first time we hit it, we drop, right? And then we're waiting for time. So time is a key element, which I'll go over that in another episode. The time element. I'm not even considering time right now because the market is going to move at specific times. But it trades up. It takes out buy side liquidity right there, right? And then it drops. Now, there's multiple entries right here. It's multiple entries right here. So you can use this right here. See this? What is this in the chat? What do y'all call that? What is that called in the chat? And it's actually a suspension gap. But what can we call that and determine that? I just said it. Yes, it's a SIBI, but it's also a suspension gap. They got two volume imbalances on both sides, right? And, excuse me, what do? We trade, we take out key liquidity level, and then we drop displacement. And when we displace, we take out these lows right here. That's a shift in market structure. After we trade it higher, we break down, shift in market structure, right? Then we trade back up into the inversion gap. Shout out to you, Dorelli. Trade back up into the suspension gap. And yes, you can place entries in this. Let's say you drop a Fibonacci. Let's check this out. Let's say you drop a Fibonacci inside of this suspension gap. Boom, boom, right there, right? This is the Fibonacci can give you a more refined, it can give you levels that you can potentially set your limit orders at. So for example, when this candle right here trades up into this 0.25 level, you can short at that, or you can short at the 50% level, right? You can short at the 50% level. There's also, if you're really locked in, inside of that inversion suspension gap, here goes a SIBI right there at more of a premium, right? Let me give it another color. There's another SIBI at more of a premium right there. So you can enter inside of the inversion, you can enter in the SIBI. But let's say you miss all that and you're just trying to get in. They offer multiple entries inside of this. Draw on liquidity. They're getting ready to reverse it. Now, what are we aiming for? Well, remember these equal lows over here? There's a lot of lows in here. There's many lows you can get out at. Let me show you. You can get out at this low right here. You can get out at these lows right here. Pick your target, pick your poison. We're just thinking of scalpers right now. We're not really, look, eventually look what it does. It goes further. But as a scalper, we don't need it to go any further, right? I'm gonna show you the power of scalping. So check this out. Let's say we enter at the midpoint of the inversion fair value gap. Let's say we enter at the midpoint of the inversion fair value gap, right? Let's measure from here, entry, to here, take profit. Well, boss, that's only 40 points. That's about 38 to 40 points right there. All right, let's round it off to 40. Let's round it off to 40 points right there. So the power of scalping is, what y'all want to do, the minis or the micros? We'll do both. Let's say you start with a mini, which is $2 per point. NASDAQ mini, $2 per point. That'll be $2 times 40. That's $80. Now y'all might be like, well, that's just $80. No. If you're somebody who's brand new, that's amazing, right? That's amazing that you can go pull out, because this repeats all day, every day. That's amazing that you can go pull out $80 at will, right? Now let's do 20, which is the mini, times 40. That's $800. That's $800, right? $800. How long did that take? How long did this point, entry point from right there, from entry to take profit right there, how long did that take? 21 minutes. So you mean to tell me I made $800 in 21 minutes, or I made $80 in 21 minutes? How many employers, think about this, how many people will go out and pay you $80 per hour, right? And let alone making $80 in 20 minutes. Let me read the comments. Really, not only that, but how long did it take? Yep, 21 minutes. $800 in 21 minutes. Now, let's not even go even further. Let's not even consider all these lows down here that I highlighted. We're going to get into that in a moment. Let's just stay right here roughly at 40 points. Let's stay at 40 points. The power of scalping is the ability to add more contracts. Because you're trying to be in and out. That's the power. That's the power of scalping. 40 points right there. 40 points right there. Let's say 40 points in 25 minutes. So the power of scalping is the ability to add multiple contracts. So let's just say, let's just use the minis, which is $20 per point. We're aiming for 40 points. Let's say you add 2 minis. So initially going to take 20 times 40, which is $800 times 2. $1,600 in 25 minutes, right? $1,600 in 25 minutes. Let's say you add 5 minis. And this is all based on how much equity you have, right? Let's say you add 5 minis. You're going to take 20 times 40 times 5. $4,000 in 25 minutes. Huh? What type of trader are you? What type of trader do you want to become? What type of trader are you? What type of trader do you want to become? Are you somebody who's busy and you want to hold a position? Holding a position is definitely, it pays out way more, right? It pays out way more. But when you put on positions like that, you're not willing to have multiple contracts on and holding them all day. Think about that. The reason scalping is pretty unique is because you can put on more leverage once you know what you're doing, not just saying just put on more leverage. Once you have the capital, once you have risk management, you can put on more leverage and you don't have to commit to a long-term trade for the day. Right? You don't have to commit to a long-term trade for the day. So what kind of trader are you? What kind of trader do you want to be? I pretty much y'all explain to me what y'all want to be, but which one is the most powerful, right? Which one do you see that is like this right here can change the ball game? They all can though. Don't get it confused. They all can change the ball game, but which one really changes the ball game for you? That's the whole question. All right. So that 5 mini contracts for 40 points is $4,000. I'm going to do the max 10, right? Let's do the max 10 contracts. I probably would never go above 10 contracts if I get minis. I probably have a threshold. But let's just say 20 times 40 times 10. Oh, shit, 1 second. 20 times 40 times 10, which is $8,000. Imagine making $8,000 in 25 minutes. Now let's see it go. Let's see it go a little bit further to our destination. Let's use one mini contract again. Entry down to this low right here, which is 55 points. We're not even, do you know how quick 55 points comes? This right here, 55 points in 27 minutes. 55 points in under 30 minutes. Right? So let's use 20 times 55. That's $1,100 in 25 minutes. I think somebody mentioned it earlier. Shep, I think you mentioned it. You trying to just scout, right? So imagine you working, you see your setup, you see it forming during a specific time of the day. It sets up. You enter your trade, you hit your target, you're done, you go right back to work, and you don't tell nobody. You don't mention this to nobody. Nobody has to know that you're doing this and you're making this type of money, because guess what? You're working your way out of your job. You're going to work your way out of your job, right? You're trying to work your way out of your job by doing this. So what type of trader are you going to be? Right? And then we're not even including holding it for the day. So you might have to so let's just say, check this out. If I had 10 contracts on, right? If I had 10 contracts on, when it drops to this lower liquidity pool right here, I'm dropping off of probably 8 contracts, right? I'm locking in as it hits each one of these levels that I have outlined. I'm scaling out, which means I'm buying those contracts back, and I'm going to leave probably 1 or 2 what we call runners on. I'm going to leave probably 1 or 2 runners on, and guess what? Now the ball game changes, because you already secured profit. And then those runners, check this out. Those runners that you left on from entry down. Let me see. 1 second. From entry down to that low. Your 1 or 2 runners that you left on, right? It goes an extra 534 points, right? And let's say you left 1 runner on, and all we got to do is pull out our calculator and type in 20, which is 1 micro, times 535. 1 micro, man. You this day right here, man. You pretty much set, right? You was set on this day. This particular day right here, we scalped the market and we left 1 runner on, and that netted you $10,700 with 1 contract. But guess what? We peeled off 9 contracts way up here. We're already locked in $6,000, $7,000, right? We locked in $6,000, $7,000, and then our last contract goes for $10,700. So, yeah, man, that type of money is being made in these markets, right? And then don't underestimate the minis. Don't underestimate the minis, because they're powerful as well. I mean, not the minis, the micros. They're powerful as well. Now let's get into something else. I walked you through long-term trading, swing trading, short-term trading, day trading, scalping. Now there's a world beyond scalping, right? There's a world beyond scalping. Now this one is a little, more technical. It requires you. This is when you're pretty much full-time and you experiment now. Like you get into the experimenting world, and the world that goes beyond scalping is high frequency trading, right? High frequency trading, which scalping, check it out. Scalping is a form of high frequency trading. Don't get it twisted. Scalping is a form of high frequency trading, but there's levels to this, right? So I'm just looking at random price action, right? I see a swing high right here, and this is a 1 minute time frame, right? I see a swing high right there. That's a micro, pretty much liquidity pool right here, micro liquidity pool. And this is for when you get way more experience, right? Way more experience. Let me go down to a 15 second. Yes, 15 second. Anything below 1 minute, you get into sub 1 minute price action. You get into the whole different spectrum. You're getting into a whole different galaxy once you go sub 1 minute. And I don't think it won't let me show that data. It won't let me show that data. So let me show you right quick. Let's go out to the 1 minute. Go to the 1 minute right here, right? I'm gonna just click on some random price action. Some random price action. So what I see in this right here, right? I'm gonna just use this random price action. It trades up, takes out buy side liquidity right here. Now I'm at the level now where I can just, I can remove, I ain't gonna say that. I'm not there yet, but I damn near can remove everything off my chart and look at naked price action because I done stared at the matrix for so long. I am the matrix, goddamn it. I'm Neo in the matrix. I don't even need nothing no more. I don't need no tools. I can just look at the market, pure candlesticks. But you can clearly see liquidity, right? Look over to the left. Y'all in the chat. Look in the chat. Y'all in the chat. What is this right here? My fucking eyes are bleeding, man. I done sat and stared at this until my eyes are start bleeding. That's how long I've been looking at this shit. I done lost my mind. What is this in the chat? What is that right there? Yes, Sibby, AWB J Manson. That's a Sibby, right? Sibby. Is it random that this little liquidity right here is resting inside of that Sibby? The midpoint of that Sibby? Nah, I don't think that's random. That's not random at all. This shit is algorithmic. All right. So this is a 1 minute time frame. Now I'm going to work my way down to a 15 second. But before I do that, I can already outline where liquidity is. Well, I'm just eyeballing it. There goes a liquidity pool right here, right? Liquidity, sell side liquidity. Let me adjust that. Sell side liquidity. Here goes another liquidity pool right there. These are targets, right? We can use these as targets. Look at these lows in here. Liquidity right here. And that's going to be enough for now. I'm just going to stop right there, right? We're just going to work with this right here on the chart. Take out buy side liquidity, price displacement. Let's go down to a 15 second. Go down to a 15 second, right? 15 second time frame. Now on the 15 second, right? 15 second time frame, same concepts, just like we showed you on the daily, just like I showed you on other time frames. We take out liquidity. We drop, right? You see the drop. It consolidates a little bit and then it drops. And when it drops, right? Look a little close. What is this candle right here? This up close candle, right? What is this up close candle? Who knows in the chat? 15 second. Trades into that right there. What is that right there? Yes, order block, bearish order block on the 15 second time frame. When you squint your eyes a little bit, just a little bit, right there, you got a what? What is that right there? This is what I mean by my fucking eyes are bleeding. Once you start getting into this level, you tell me, right? Y'all tell me. You tell me, is that random? When I zoom in on this, is that random or not? Is that fucking random? I'm on a 15 second time frame. Is that random? Where price will trade right into that bing, just like that. And what does it do? It drops. Right? Now let's zoom out. Let's zoom out a little bit. That's not random, y'all. That's not random. So when it drops, right? it starts to trickle down. Start looking to the left. Liquidity, sell side liquidity right here. Sell side liquidity. That's not what I'm aiming for. That's really not much of a price run, but you can see it drops down, takes out liquidity. Once it takes out liquidity, right? Before it takes out liquidity, it takes out liquidity. Once it takes out liquidity, look at this candle right here. When it trades up, what does it trade into? Y'all in the chat, what kind of candle is this right here? Bearish order block. Yep, y'all are right. Order block, bearish order block. Kind of candle is that? So look, we trade up, right? Trade down. Once we pierce or opening price, right? Take out liquidity. I'm gonna remove liquidity. Once we take out liquidity, we no longer need it. The next candle right here trades up into the order block. Boom, just like that. Look at the midpoint. If I draw Fibonacci from the midpoint of that order block right there, midpoint trades into it. Is that random? Come on, man. Look at the. I need to, bro, drop mic. I need to just drop my mic right quick. Is that random? Is that random? 50% level of the order block. Is that fucking random or is that not coded and baked into the price? Huh? Is that not coded or baked into the price? Come on, man. Like, and you wonder why I say I'm not long-term investing no more. Why would I ever think about long-term investing when I have cracked the code by studying this shit, right? Have cracked the code by studying this shit. Hopefully I'm not putting a target on my back, man. The fucking Matrix. Yeah, hopefully I'm not putting a target on my back on YouTube talking about this shit, right? Hopefully I'm not going crazy. I'm just speaking the language. But look, after it hits the order block, it starts to sell off, right? And when it sells off, what does it tag? Well, it kind of rejects a few things. It trades into this volume imbalance over here on the left. We can highlight that. Trades into the volume. Guess what? That could be a target, right? That could be a target. Now let's measure, right? Let's measure right quick. Let's say we entered right here at the volume imbalance. Or, I don't want to get that too precision. I don't want to give that much precision. Let's just say, we enter right here at the order block. And this is what I mean by high frequency trading. We enter at the order block right here. Boom. We drop down. Boom, right there. Let's go ahead and say that's about 17 points. We take profit at 17 points. But then I just show y'all the power of scalping. So let's just say from entry to take profit, 17 points. Let's say $20. And this is for people who want to go slow, but you got to learn the skill first. 20 times 17, that's $340, right? For y'all that work and y'all just looking for, okay, how long did that take? Watch this. That trade took a 1 minute, 45 seconds. 1 minute, 45 seconds. High frequency trading. $340, one contract. 1 minute, 45 seconds. $340, one mini contract. Huh? Is that not what could that do for you? What could that do for you, right? It's all about perspective. It's all about perspective. Can you imagine, like, damn, motherfucker, I just made $340 in 1 minute and 45 seconds. Who out there on this planet, right? Who out there on God's green earth? Now, there's some jobs out there that will. Who out there right now, realistically, is going to pay you $340 an hour? Who's going to pay you $340 an hour, let alone $340 per in 1 minute and 45 seconds? Huh? Yeah, I know. But look, it hits it, right? You take profit right there. Are you not entertained? Yeah, man. I need one of those sound machines where I can bring in. I think I can do it. I'm gonna have to work on it. Are you not entertained? God damn it. Really, not even doctors make that type of money, bro. I think doctors on average make probably about $500, $600 a day, right? $500 to $600 a day, depending on what kind of doctor they are. But doctors don't make that type of money. Entry, boom, down to middle point, boom. A minute and 45 seconds. Boss the Gladiator. Yeah, that's funny, man. That's funny. But look, after it takes profit, right? After you hit your take profit, it comes back up. And when it comes back up, you remember this order block that we marked up? That's another entry. Boom, right there. Drag it over to the right. You tell me if that's random. Order block, trades right back into it. 1, 2, 3, 4 times. Another entry point, sells off. What are we aiming for? Liquidity. Let's highlight it. Entry. Boom. Down to take profit. Boom. Just like that. Another 20 points. So another 20 points. So we're using one mini. There's no point in adding multiple contracts if you're going to do this style of trading. You can once you get into that equity. But why not just run one mini contract and 20 times 20? Another $400. So you just made 300 plus, and you add in another 400 on top of that. How long did that trade take? 1 minute, 30 seconds. 1 minute and 30 seconds. High frequency trading. All right. And we want to talk about doctors, right? We want to talk about doctors. No, that's why this skill set right here blows everything out the water. You learn this right here, and you spend years with this. You got to spend years with this. I'm forever dedicated to this because I started it and now I'm here, right? I started it, now I'm here, and I'm not going to stop unless God says otherwise, right? I'm going to be here doing this. And there it is. First trade, 1 minute and 45 seconds. Second trade, 1 minute and 30 seconds. Now you're starting to see compounding effect, right? You're starting to compound real quick. Look, check this out. After we take out liquidity, guess what? We got a new dealing range from this swing high right there down to this swing low. Right there, right? Y'all tell me, from this swing high right here down to this swing low right here, it goes into a premium, right? Price trades into a premium, and then it goes into this chop sideways consolidation. But you can trade through this. You can sit through this, but you got to use the dealing range. Trades up into a premium. Y'all look over to the left. We got a large suspension gap where we got a volume balance right here. So this candle right here becomes a suspension gap. Let's highlight that. I'm going to take it, square rectangle from here to here, suspension gap, right? You can put your limit order right on equilibrium, right? You can put your limit order on equilibrium. Stop loss up here. How wide would your stop loss be? Let's measure. Equilibrium up to this high. We just talking about 6 points, right? We just talking about 6 point stop loss. That's why we on these lower time frames. We on a 15-second time frame. A 6 point stop loss will not hurt you at all. 20 times 6, $120, right? $120 ain't gonna hurt you. And unless in the beginning, you got to know what you're doing, right? Because a lot of times you might get impulsive where you're getting in, getting out, getting in. Once you clear that up out of your system, then it starts to make more sense. And then look, we wait for it to come to the premium side, trade right there in the middle. Is that random? Our price trades right into the middle of the suspension gap. Let's say we enter at the middle of the suspension gap. And what are we going to aim for? Well, we're going to aim for this low right here that I outlined, right? So we're going to say we enter right here at the middle and we target liquidity right here. That trade right there, 5 minutes, 18 points, right? Let's say 5 minutes, 18 points. That's 20 times 18, another $360. You only waited 5 minutes. Do y'all not see the power in this? If you get stopped out, right, you're only risking $120 for a reward of 20 times 18 for a reward of $360. $120 risk, reward $360. But guess what? I just showed you 3 trades within less than 15 minutes, less than 10 minutes. Right? I just showed you 3 trades less than 10 minutes, and you will be well over $1,000 in a short period of time. Right? So, yeah, man. What style of trader are you? That's the question. That is high frequency trading. And then check it out. Once it takes out liquidity, right? This just for completion's sake. We take out this low right here, right? We trade down into a BISI over here, right? Trade down into a BISI. Boom, right there. I'm going to drag this all the way out to the right. Drag it all the way out to the right. Just like that. Is that random? No, that's not random. What happens next? Displacement. Change in the state of delivery, which is the definition of an order block. You see all these consecutive down close candles? That's one consecutive order block. So when we trade up, right, we change the state of delivery and the market shifts bullish. Here it is. Let's use the opening price of this candle right here. Boom. You tell me if that's fucking random. Excuse my French. I just be I'm feeling it right now because y'all just don't know the power in this shit, but I'm showing it to you. I'm showing you the power of this, right? This shit ain't random. I spent so many hours and I'm going to continue to spend hours with this. Opening price. Is it random that these fucking candles trade down right into that? Boom. Just like that. Next candle trades down into it. Boom. Just like that. Huh? Is that random? It's not random at all. And then what does price do? Look over here to the left. You see this high right here? That is buy side liquidity, right? We talking about high frequency trading. This is high frequency trading, right? High frequency trading right there. Buy side liquidity. Let's say changing the state of delivery after taking out liquidity. Price trades down into the order block. You can also, if you want to, for completion, BISI. Let's go ahead and add the BISI. Buy side imbalance, sell side inefficiency right there. Is that fucking random? Huh? Is that random? No, it's not random. Fair value gap entry. You might not see the order block, but there goes a fair value gap right there. You enter on that. What are you aiming for? Yes, it's high resistance. Yes, it's barcoding. Yes, it's choppy right here, but you're going to get in. Your stop loss is going to be probably, depending on where you get at, you can drop your stop loss somewhere in the middle right here or at this low. Let's say you put it at the bottom, right? Stop loss, entry, order block right there. It's 15, 16 point stop loss. That ain't going to hurt you. Not going to hurt you. If you're trading micros, that's not going to hurt you. If you're trading minis, that's not going to hurt you because you're not looking to hold. You're trying to get out right here at this high. How many points is that right there at that high? Entry from the order block up to that high. Oh, 26 points. What is that if you're trading minis? That would be 20 times 26, $520. But this time, you're going in the opposite direction. You went sell side, now you're going buy side. Boom, just like that, right? So high frequency trading. High frequency trading. Let's say you hold that, right? Let's say you want to kind of hold that. Let me draw this high right here. Drag it out to the right. And let's just say you hold that trade, right? Let's say you go from high frequency to a scalp. So now you're trying to scalp this from here, order block, up to this high right there. Boom, right there. 55 points, 20 times 55. That's $1,100 right there. Does price not go there? Boom. And when it hits it, what does it do? Displace, right? It drops. After taking out liquidity, it drops. And guess what it does? It creates a what? A fucking SIBI right here. Boom, SIBI. Enter on that SIBI. What are you aiming for? You see these lows in here? Get out. Sell side liquidity right there. Now you shorten the market again. Boom, just like that, right? Sell side liquidity. I can go on all day and you tell me the power of this. Let's say from entry, middle of the SIBI, right here, down to take profit right there. 15 points, right? That's all you're aiming for. You're looking for about 15 to 30 points, you done. If it goes any further, that's just icing on the cake. So 20 times 15, that's an extra $300 right there. And then it goes sideways. But do you see, this is kind of when you're full time and you're kind of like, you have to engage it. Now, when I zoom out, right? When I zoom out in price, look what I'm showing you. This looks like a consolidation, right? This looks like a consolidation, right? It looks like nothing. It looks like, oh, it's chopping. It's chopping around, right? When I zoom out in price, when I just zoom out, look what the type of trading I'm showing you going on in this right here. Well, that's because I'm adding more context that I'm gonna go over in later videos. But if you can understand what I'm showing you right here, go back and watch what I showed you yesterday, starting from a higher time frame. And then I propose a question today. Hey, what kind of trader are you? What do you want to use? Like that. If you watch the video from yesterday or the live stream, the lesson 1. I give you the foundation, and then from the foundation, you can start deciding, hey, what kind of style of trader am I going to be, right? I just showed you in high resistance conditions, up, down, both ways of the market, right? Both sides of the market. That's high frequency trading. There's scalping, there's day trading, short-term trading, swing trading, and long-term position trading. What style of trader are you going to be? So before I leave out tonight, I'm going to leave y'all on that one. Definitely go back and watch this one. What do y'all rate this right here? What do y'all rate this as a lesson, right? What do y'all rate this? Let me know in the chat. But before I leave, I want to know which one interests y'all the most, right? Which one interests y'all the most? Out of all those styles of trading, which one do y'all see yourself being able to do right now? Jay Manson, very strong in this one. You said the force is with this one? Y'all crazy, man. Jay Manson, welcome to the dark side. That's crazy, man. 10 out of 10. What's up, Malcolm? Man, Malcolm, I ain't seen you so long, bro. What's up, man? What's up? God damn, I ain't seen y'all in so long, man. What's up, man? I'm doing a little series, man. I'm doing a little educational. I'm trying to get back to the education. I'm gonna mix in some of the drama and shit with the noise. But which one do y'all, I'm just trying to figure out how do y'all rate this? All right. Y'all telling me it's a banger. Y'all telling me this was a good one. But before I leave out, I want to know, what style of trader do you want to be? Appreciate it, Malcolm. You had to swing by, man. We still cooling, man. We getting better, man. We done took this shit to a whole nother level, Malcolm. AWB, excellent work. It gets better like fine wine. Great video. Appreciate it, Malcolm. Appreciate it. Shep, scalping, but need to start demo. Yes, start now. You can start now. Look, you can sign up for TradingView right now and sign up to a paper account, paper trading. You can get started right now. That's for free. You could trade for free, but when you do that, you gotta pay for real-time data. Pay for real-time data. It's only like $5-7 a month. It ain't nothing. Yeah, man, but that's the question, man. Make sure y'all hit that like button, subscribe, share the video, share it out. If you know somebody that's like, hey, man, this dude right here, he's fucking, do y'all see how I switched up when I started talking about this high frequency shit, how crazy it can get, right? But I got to be in the mood for that at times. Like, I don't want to, every day I don't want to engage the market like that. Some days I'm kind of like, I want to go about my day. Sometimes I like to put on a trade, get out of the trade and just go live life, right? Just go live your life, do other things. But then there's times where I'm experimenting, and I just showed you when you start getting experimental with this, it can get crazy. TZ, day trading, my plan. Yep. Got the day trading. We got Shep, you want a scalping. Yep, because scalping, Shep, you pretty busy. You say you're working, so you want to be a scalper. I know AWB wants this right here. He wants to be this high frequency scalping machine. He wants to make 60% in a day. He wants to make 100 and 400% in a week. I know AWB, he wants to get crazy with this. And that's another thing. I think next time I'm probably go over percentages, right? I didn't even talk about percentages and money management, right? So we're going to get into that probably maybe the next episode. Y'all give me some ideas before I get up out of here. What are some things that y'all want to know, right? What's some things y'all want to learn? And I'm going to try my best to go over it. Jay Manson, you said let him cook. Yeah, I'm going to let him cook, man. I'm going to let him cook. Darelli, I want to get to being the market scalping schizo. I'm gonna tell you now, Darelli, it's gonna take some practice, right? But it takes time, but you can achieve it. When I say time, give yourself about a few years, right? You can work into it, but you can start practicing it now. And then once you understand more what you're doing, then you can work into it. But I'm gonna tell you now, when you high frequency trading like that and you become schizo, it's draining, bro. I don't know if y'all ever did it. It can literally drain you to where it's like, damn, I didn't do nothing physical today. And then you'll be crashing like, how you had a long day at work and you just crash at the end of the day because you're so goddamn tired. High frequency trading does the same thing because you mentally locked in on that screen and you trying to capture every move. So it would drain the hell out of you. But over time, it's like muscle. It's like building muscle. So your brain, you're building the muscle in the brain to like recognize what's going on. That's why I was able to show you what it looked like just now. But over time, you're going to be building that brain muscle. And then over time, you're not as drained no more. It's like, shit, I've been working out. I've been working out for this. But in the beginning, you're going to start doing it and it's going to drain the hell out of you. AWB, nah, I just wanted to make some Benjis. Okay, AWB. The rally over time, it's all good. What's grass? Yeah, I feel you. What's grass? Yep. But if y'all just joining, man, and y'all brand new, please subscribe to the channel, right? I'm getting a lot of people coming in, but y'all ain't subscribing. You know what I'm saying? I'm looking at my numbers. People pass through, but they don't subscribe. And, I get the watch time, but nobody's subscribing. So make sure y'all subscribe. If y'all want to join the Patreon and the Discord, click the link in the description. Sign up. If you're brand new, come over here. Follow me on X, right? Follow me on X. I'm trying to get more active on X. I see the power in X now, so I'm trying to utilize X, right? Subscribe to me on X. And hopefully y'all enjoyed this one. I'm going to try to keep making these engaging and educational, and I'm trying to give as much free resources as possible. So I appreciate y'all joining. Hopefully y'all enjoy the rest of y'all evening, your night. If you missed anything, y'all came in late, go back and rewatch the live stream and go back and watch the one from yesterday. Other than that, I'm going to let y'all go about y'all business and I'll get back with y'all on the next one. Peace out.